Wealth isn't just finance, because if you have a ton of money and your health is horrible, you're not enjoying it.
Welcome, friends, to a podcast with interesting people. Justin Maxwell is my guest today. He's a financial advisor, and we're going to be talking about financial planning, what can we do right now, especially in the COVID era where things are just blowing up, companies going out of business, people losing their jobs. A terrible thing, and everybody's brains are on finances. You know, what can we do? Can we do anything? So in a little series of me talking to subject matter experts in a casual format, in a casual way, I'm invited today Justin Maxwell. Welcome to the show, Justin. Thanks for being over here, and get ready for picking your brain and with finances.
Yeah, I'm really excited. Thank you for letting me come on the show. I've loved speaking to you before, and I'm just really excited to have the opportunity to chat with you.
The theme of the show is conversations with interesting people about interesting things and that bring value, right? So today we're going to be talking about money. We put a green background over here to set the tone for money. And so tell me a little bit about yourself. Tell me about, how did you get into this? Why are you doing what you're doing? And what is it exactly that you're doing?
Right. So I think it's important for you to understand who I am as a person. So I have a family, and that's who I love, and that's why I do what I do. And so I didn't start out in the financial industry. I actually didn't even start out in entrepreneurship or anything like that. I was not once in my brain when I was growing up did I ever think I'm going to be my own boss. I'm going to be an entrepreneur. I'm going to own my own business. I'm going to do my own thing. Not once. It was always
a fireman.
I'm a fireman, or a lot of times it was professional athletes for me. I love sports, but it was I'm going to go to school. I'm going to get a job that's going to be secure and keep me safe, and hopefully make enough money for my family.
Yeah.
And so I did follow that path, and I was a physical education teacher, and I enjoyed that. I did it for 6 years. I found a lot of enjoyment because I am passionate about health. I feel that our society needs people that are passionate about health, because so many people are unhealthy. They don't move enough. They eat horribly. They drink horribly. They just don't take care of their bodies. So I think there's a need for that. But I hit a point in my career as a physical education teacher where I was like, I'm making enough money to survive, because teachers get paid enough to survive, but it wasn't enough to live, to live and enjoy the world. We were stuck in apartments. We were living paycheck to paycheck. It's a hard life to deal, even though you're passionate about it. When you hit that wall of financial, I don't know if I'm going to make enough money. Are we going to make enough money? My wife wanted to stay with the kids, and I love that she does that because she's a fabulous mom.
It's constantly on your mind.
Right, it's always on your mind, And so there's a lot of stress, a lot of pressure. She's always looking for things. And that was in my mind for a while, but I hit another wall that made me push to something else. And that wall was I felt like I had reached a point where I wasn't passionate about wanting to learn more and how can I improve my coaching? How can I help my kids grow? I just hit a wall of, I don't think this is what I want to do anymore. I was stuck, and so I wasn't making enough money, and I hit that wall of purpose, not fulfilling enough purpose in my life, and so that prompted me to seek out elsewhere.
Right. So how did you land in financial industry?
Oh, that's another path we have to go down. So I did physical education. I taught, and I was I need to learn. So I took purchase courses on just all sorts of stuff, from retirement accounts to taxes to real estate investing to money and what money looks like, just so I could see if I could find something that fit who I was and see if I could find my purpose, so I could start diving in and actually make more money for my family. Not only fulfill my purpose, because I felt like I was doing that a little bit with physical education, but that financial barrier. Right. And so I did that. I took those classes. I started flipping houses and doing things on the side to make some more income. And I just kept pursuing and digging deeper and deeper. That's something that I've always done. Is I'm just a ferocious learner. When I am interested in something, I dive into it. I learn as much as I can. I read articles. I read books. I listen to podcasts. It's just full bore, full on in. And so I kept being drawn to taxes. I kept being drawn to
That's the
how money works,
thing.
Right?
That's the weirdest thing that I've ever heard. I kept people are taxes. Oh no, it's that time of the year again. So tell me how did that happen?
Why? I don't know. It just fascinated me because it was when I was
because
looking,
it's scary? Is it because it is scary to some other
right?
people?
I think it was scary to other people, but it also was like when I was looking at like my physical education, like as a teacher, like how much money was I paying in taxes? Like, how is my retirement going to look in 40 years from now when I don't have a pension? I'm contributing like 4%. I'm getting like a 4% match for my school, but it's not. Like, if you look at how much money I'm going to have in 40 years, it's not going to be enough. And, like, there's so many teachers that just don't, like, people don't realize that you're just sticking money somewhere and you're just hoping it's going to work out. But, like, if you look at it, like, I was like, holy crap, I cannot be a teacher and not do something else. Or else I'm not going to have enough money. Like, we're going to live on less than I do as a teacher. And and we have inflation. Like, it was just frightening. So I dug into, like, how can I solve that problem? Like, what can I do to do that? And I was like, I kind of enjoy solving this problem. Maybe I can help other people solve this problem. And so I eventually, during all this, like as I'm networking with people, like network with real estate people, financial people, like I was just constantly learning. And I met my partner, Derek Van Ness, who created Big Life Financial. And like what he does was like dead on with what I had kind of been like slowly inching towards, like helping people save on taxes, helping people put their money in a place that's actually going to be successful and grow, and help people come with a plan that's going to live their biggest life. That's why it's called Big Life Financial. It's so that your finances aren't an issue anymore. You can now live life, and that's exactly what I was looking for. Like I wanted to live life, not just be in life, and like just have it.
Right. And that's there's a quote on your website, Big Life Financial, which is a quote from Benjamin Franklin, who said, apparently it's on the internet, so it must be true. Right? It's definitely definitely. So he said, wealth is not his that has it, but his that enjoys it. So it kind of goes in line with what you just said, which is like, you know, you might have wealth or you might have something, but if you don't enjoy it or you don't get to enjoy it, then what kind of wealth is it? Right, exactly. And that's why I really am drawn to this, because it's not just financial wealth. Wealth isn't just finance. It's your health, it's your relationships, it's a whole package of wealth. Because if you have a ton of money and your health is horrible, you're not enjoying it. Well, that's very true. That's a very good perspective. I haven't considered that, because it's actually one of the guests that I had on the show was talking about lifespan versus health span. It's not only how long you live, but how well you live in terms of being healthy. Right. You know, if you're very sick and you live long, then what kind of life is that, right? So it's interesting how that can be expanded into you know, financial wealth being a component of that as well. As part of it, but and it's not just health too, it's also your relationships. Like it's like your wealth is it's much more broad than just money. And so money helps obviously with those things. If you don't have money, then you can be healthy and have a wonderful relationship, but you're probably going to be a lot of stress and a lot of struggles, and maybe you'll find this niche where you're like just comfortable, and that's completely fine, and everyone has a different need of what they need coming on a wealth basis. But I really love what I'm doing now, because I found a way to still have that desire to help people health-wise. I can help people financially. I don't help people with relationships, but solving your money problems can help relationships. So there is a little bit of help there. So it's a whole encompassing ball of not just money. Right. So what are some of the top things that you've learned? Because that's an interesting transition what you've done from physical teacher, right, to financial, planner, expert. What are some of the things that you've learned, in this transition? How did you think it was going to go when you got into this field, and how did it actually go? I've learned that it requires a lot more hard work than some. There's some like educational services and some entrepreneurial people that will tell you, hey, you're just going to make tons of money. We're going to be just buy this or buy that, and we're going to help you get rich. It's not there's no quick success. Like, if there's a weakness in entrepreneurship, it's going to be found. Like, if, for example, like as a physical education teacher, I was not a good salesperson. Like, I didn't feel the need to develop that skill within me, and I found out really quick that was a weakness in me. Right. And so I had to develop the salesmanship, and I'm still developing that salesmanship. So, like, you're going to find out really quick that there's a ton of weaknesses, and if you're not good at something, it's going to be glaring, and you're not going to get sales, you're not going to make as much money. And I think that's a lot of the reasons why a lot of people just give up, or their businesses fail, is because it's hard. Like, there's a lot of things that you don't ever actually know that actually exist, like taxes, like
like being a good salesperson and not being like, you just think, oh, I have this great idea, it's just going to pop out and people are going to love it.
Right.
But you have to market it, you have to sell it. And if you don't know how to do that, then it's not going to work most likely. You might get lucky, but probably not. And so that's been the biggest learning experience for me, is that it doesn't just happen. You have to invest in yourself to really hit those things that are going to make you successful in that field.
Because you mentioned sales, what did you find out is the biggest I guess keys to success in being a good salesperson?
Listening and asking questions. So listening to what the person is saying, like what are they wanting, and then asking a question to dig deeper into that want and need, so it becomes glaring in their mind enough to want to purchase. Because like I am an analytical person. Like I need to be proven analytically, and the majority of people aren't that way. And so when I try and show people, hey, look at these numbers, like this is awesome, like look at this makes perfect sense.
You should be doing this, right?
And they're like, I don't whatever. It doesn't make sense to them.
So what do you think? It's like, it's more of a so what are the key elements of success for a salesperson? Is it building relationship?
It's building relationship. Yeah, you have to build a connection with someone where they trust you. They know, they don't have to, maybe there's some sort of like, they have to like something about you. And I think something that I've heard and I like is people want to buy stuff from people that they think believe like them. And so I have to prove to you that I believe just like you do, and I'm just like you are, and this product is going to solve the problem that we both have. It solved my problem with that, and it's going to solve your problem with that.
Well, maybe that's why we ask a lot for like references from our friends, right? When we're like, hey, I need so and so, whatever. Can you recommend someone? Because we think that our friends have like the same maybe way of thinking about things, or like if it worked for them, it's going to work for me, right? So we need that kind of referential relationship. Right.
Exactly. I think that's key. I think it's very. And I think one of the problems in my head is I had to get over this is like a lot of people, when they think salesman, they think pushy carsman, they think jamming it down my throat, trying to get me to buy something I don't need. But if you go into that with that mindset as a salesman, then you're going to be that person. You have to have the mindset that you're offering a service that's going to be beneficial, that's going to be something that they need. They need this. This is something that's going to benefit them. But if you have that, I'm the pushy salesman person, then that's who you're going to be, and you're not going to reap rewards, and you're not going to have success.
Right. In terms of financial planning and what we have right now with COVID, briefly talked about how COVID is impacting the businesses. A lot of companies are going out of business. They are closing doors, crushed by what's happening. Right. What do you see? And so people are like, even after the COVID pandemic, and when let's say we recover, people will be risk averse. They will not be as willing to open up new businesses or jumping into businesses. But for those who will be ready to do that, what are some of the advice that you could provide or share in terms of like how would you start a business with financial planning in mind?
Right. So I think the best thing to realize for people is that if, as a business owner, you're going to spend about 20 to 50% of your income on taxes. And so if you choose not to care about taxes, or you choose to hand it off to just a small business person who doesn't really specialize in it, and that doesn't have a good small business tax rate, doesn't focus on business, then you are going to be handing over money to the government for no reason. And you're going to be costing yourself money. That money could be used to help you expand or hire a new employee, or to really like invest in a product that's going to change the world. But because you don't have that money, you can't use it.
Right.
And so my number one thing is have a tax plan. Like, know what strategies are available to you, and then take advantage of it. Because the reason the tax law exists for businesses specifically right now is they want you to keep as much as possible, because they want you to be using it in your business, because they realize that small business is the economic engine of our country. And so like if small business is running, the country is running. If small business is dying, then the country is going to be struggling economically.
Why is that? Why is that? Why is that opinion of small businesses or the strength of the country?
It's something like if you listen to senators talk that are on these tax committees that are creating the tax code, like that's what they're saying, and it's because they're hiring, small businesses hire the majority of people, and so if that small business dies, more people are unemployed. They're small businesses, like some of them create things that change the United, like keeps the United States as the economic power of the world, that keeps people going. So I think it keeps people employed. It allows people to fulfill that American dream that they wanted. Like, they have an idea, I want to start this business, but I'm just going to do it. And if you're paying too much in taxes, it's very difficult to stay open. But if they're giving you these tax breaks, which you just have to take advantage of them, the tax laws are there, then you can actually keep more and then expand your business and focus on your business and making it better versus, man, we're really tight on money because I gave 50% of it away to the government.
Right. So basically, be smarter, be better educated about how to take advantage of the tax breaks or and tax programs for small businesses.
Yeah, that's the number one thing, because if you, it doesn't take, like, you don't have to be a CPA to understand the strategy. Like, just know the strategies and then have the conversation with your CPA. Like for example, one of them that we see a lot of businesses missing is the research development tax incentive. Like, it just takes a conversation with your CPA. Hey, I heard that this tax incentive will pay me money for doing these specific things in my business. What do you know about this? Like, how can I start implementing this in my business so I can start using that and getting that money back? And hopefully your CPA, if they're solid and good, will have a conversation with you and say, hey, this is what you should be doing. This is a good strategy. If they're not, then I would highly recommend finding someone that does, because there are plenty of CPAs out there that will give you that advice and will tell you, like, hey, this is a strategy that's going to really impact you. They'll not, once you start having that conversation, then they'll start looking for other things. Like, I think this would apply here. Or I think that's the type of conversation you have with your CPA. So
you need a CPA or someone who has that mindset of helping a business grow. So kind of like how to tweak your tax returns, how to take benefit from all these programs, versus just like, okay, here's where you want to pay max in taxes to kind of keep the IRS away.
Right, correct. And like, if you don't want to pay, like, there are tax strategists. Like, I'm not a CPA, but I call myself a tax strategist. So like, I have the strategy, and then if you want to double check it with your CPA, you go to your CPA and you bring him that strategy. Like, hey, I heard that we can do this and this and this, and then they can confirm it and say, oh, maybe we should tweak that a little bit. And they can dial in on the exact laws of it, but the strategy will at least give you a starting point.
With respect to businesses and starting your own business, what are some of the key things that you see, and like from maybe your own experience or maybe the clients that you work with in terms of success? What are some of the top things that businesses or business owners, small business owners, can do to kind of ensure success?
I think not just following the crowd. So taking advantage, like learning what you want to do, but hiring a team of people around you. So don't just follow the crowd and just say, oh, look, they're doing this, I'm just going to jump on it. But that might fit for their business. It might not fit for your business. So having a team that helps give you advice and tips, I think, is really important. It doesn't have to be expensive, but someone that's ahead of you on the trail of that path. So they're giving you tips. We've already been here. Follow this path. We've already been through the woods. Follow this. So I guess that would be considered a mentor of some sort that's going to guide you through that. So I think that's a key one. I think people that are innovative, people that aren't willing to just like get stuck on one product or service, people that are willing to adapt it or make it work or fix it or just change it all together. Like, I think we've seen that with this COVID virus, is businesses that were stuck in one spot and weren't willing to adapt, they've unfortunately probably might end up dying altogether. Right. The people that have been innovative and chose to, like, let's switch it up, let's try and add another service, let's try and do this, or try and just solve the problem, instead of getting stuck on we're only this type of company, they're innovative and they're switching. I think those two, mentor and being innovative, are the top two I've seen.
Everything is Figure Outable is a book that I'm reading right now, which kind of has that premise of, like, it's a mindset where you're presented with a problem, there is a solution to it, but how you're going to find it and how you're going to implement it is up to you, versus like, oh, well, I can't do this right now anymore, then therefore, I'm going to be just out of business, because you're just so stuck on one way of thinking about what you can do.
Right.
So let's talk about wealth. Let's talk about what is happening, with wealth around the world right now, and what are some of the vehicles that people can employ to kind of build their own wealth. In your sphere of what you're doing, what are you seeing in terms of wealth management right now? People are freaked out by this whole COVID pandemic. Businesses going out of business. People are trying to place their money somewhere safe and in hopes that they won't lose it. Stock market is it just up on its head. It just makes no sense, right?
Right.
Like all these businesses going, record unemployments and things like that, and stock market is just going to the stratosphere. And so, what are you seeing in that space?
Yeah, so the majority of people, when you hear financial advisor, it's going to be stock market based. It's going to be mutual fund based, and that is not anything what we do. We don't necessarily hate the stock market, but we do feel that there's better places to place your money, because the stock market is full of volatility. Like, we have no idea what's going on. You're 100% correct. It's like the stock market's being carried by like 6 companies, 10 companies, and it doesn't make any sense. Like, why did it go back up when things are still so negative? So there's a lot of like confusion. Like, when we talk to people, like, we ask them, like, how much do you understand about it? How much do you feel like you know and understand the stock market on a scale of 1 to 10? The majority of people are less than 5, and yet the majority of people just hand their money over and say, here, stock market, make me wealthy.
Right. A lot of it is probably fear of missing out. Like, they see like the stock market just keeps on going up, and they're like, all right, I got to put my money in and ride this thing up. But then again, you don't know where that floor is going to drop and it's going to fall again. Yeah,
you're exactly right. And so it's crazy. I don't understand it. It doesn't make any sense.
So what is it that you do that you recommend people do or look into in terms of having some kind of a risk management strategy while building wealth and not falling behind?
And so there are other options. Like, I want to make that really clear to your listeners, is you don't have to put your money in the stock market and have compounding growth.
Right.
We have vehicles. We use what we call the money maximization model. It utilizes a paid-up edition, high cash value, whole life insurance policy to store your money.
Right.
And I know when I said that word, whole life insurance, like, some people are like, oh my gosh, he's selling me life insurance. I'm going to turn off because there's such a bad name about whole life insurance. But I just need you to listen for 2 seconds. If you went to another life insurance agent and you said, I want to do what I heard Justin talk about on this podcast, money maximization, I want a whole life insurance policy so I can store my money there, the life insurance agent is probably not going to have any idea what you're talking about. And they're just going to set it up so they get as much commission as possible, and it's not going to be what I'm about to describe.
Right. So what is that? What is that money maximization?
So money maximization is tweaking whole life, setting up whole life in a way that allows you to maximize your dollar. So whole life insurance has 2 components. It has the death benefit, which most people are familiar with. When you die, your generations or whoever you determine as your beneficiary.
Is that your standard life insurance? Or
Right. Well, so like most people are familiar with term. Mm-hmm. So you buy it for 10, 15, up to 30, even maybe 45 years. And then at the end of that years, if you haven't passed away, the insurance company keeps all your money. If you died in that time period, they'd give you the death benefit. Not you, but your inheritance, your beneficiaries. Whole life insurance has that component as well, but they also have what's called cash value. And so the way we set it up, you're going to save 67% on your fees. The money is available in cash value on day one. And this is the best part, you're going to get approximately, over the last 30 years, it's averaged 5.5% return net. So that's after fees, that's after taxes. So when I'm using that money, it's coming to me tax-free.
Is that annually?
Yes, annually, 5.5%, but in between 4 and 6% annually is what we're seeing right now in our current environment. And so it's a place where people can store their money growing at 6% net. If you're going to get 6% net in let's say a 401k, you're going to have to average about 9 to 10% a year, because you have to pay fees as it's in a 401k, and you have to pay taxes when you pull it out.
Right.
So just an example I like to use, if you had $1 million in your 401k and you pulled it out, you're going to pay about 20 to 30% in taxes. So you're going to give about $200,000 to $300,000 to the government. If you had $1 million in the account that I'm describing, you get $1 million. You get all of it. So that's what we like about it, is it grows tax-free. It allows you to keep it in a safe place. And probably the best part about it is it's liquid. So it's not just an or, like I'm doing this or the stock market. It's I'm doing this and I can invest in real estate, and I can invest in the stock market if I want to, and I can invest in oil and gas, and I can start a business or buy a business. So the money in this account still grows at 4 to 6%, and you can take it out and use it as it's still growing here and use it to invest in something else. So you get double dipping. So it's making money here and it's making money over here.
Is this something new, or
It's been around for a really long time. So the companies that we are using have been around for over 150 years. So these companies have survived World War I, they survived the Great Depression, they survived World War II, 2008. Like all the negative things in history, they've always been positive.
How come? How what are those companies, and how were they able to survive all these drops in the market?
So life insurance companies just have to be, like by law, they have to be soluble they have to have money matching. So as much money as you have in your cash value account, that savings account that I discussed just a second ago, they have to have that matched same amount over here in their own account. And so the banks don't have to have that requirement. They have to have that requirement because they have to pay a death benefit if you die. So they have to pay you because they contractually agreed to do it. And so people for a long time, like that this strategy I'm describing is not new. It's like people did this up until about 1980 when the 401k became popular. So people switched from this strategy to the 401k because companies started matching and putting money in for you, and it just became almost the cool thing without even thinking about why it became the cool thing. And so this was left behind, even though it's been a rock solid strategy for over a century.
What is so it's life insurance. Tell me a little bit more about that, so I can understand.
Yeah, so it's like the strategy we're using this for. The reason we're using life insurance, is because of that net 4 to 6%. So there is no volatility. So the lowest that it's going to go is contractually guaranteed is 4%. That's why we're using life insurance. If there was another product that offered what this did, we wouldn't use life insurance.
Right.
We're not after the death benefit. We are only after that cash value. The death benefit is just a cherry on top. Like it just helps you have a legacy, helps you give a little protection.
Right.
But we're after that cash value account, because that cash value account, when you have that 6% growth or 5% growth every single year without any negatives, it becomes very powerful. Like these accounts will beat 85-90% of mutual funds in the world, and it probably beats more than that, but we know that it beats the S&P 500 over a 30-year period. It has for the last huge chunk of time, last 40 years, it's beat the S&P 500, and the S&P 500 beats about 85 to 95% of mutual funds. We just don't have access to all the mutual fund data, but we know that it beats the S&P 500, and so it's the safest place you can store money as a foundation. We're not trying. When people talk to us, they think, we should stick all our money here. That's not what we're saying. We're saying this is the foundational piece that you can still invest in other things, but it builds a foundation that gives security. It gives you an emergency fund. It gives you an opportunity fund, which all those things give peace of mind. And when you have peace of mind, then you can make decisions that will be better for investing.
Right. And the big thing is kind of beating the inflation, right? That's why savings are dead right now.
Right.
Nobody keeps money in savings because you're just losing money if you're going to put in savings, right? So what is typical amount, or what do you typically see when people are introduced to this kind of strategy of using these financial vehicles to build that? What do people typically come in with? Is it 10 grand, 100 grand, $1 million bucks? What does it take to kind of get in on this? Yeah,
so a lot of people think this is for the ultra wealthy. So, for just an example, the Rockefeller family, that's a pretty big, well-known name, right?
Yep.
They have used this strategy for the last 6 generations, and so people think that's a billionaire strategy. So we have the ultra wealthy definitely use this because it's safe, and it allows them to pass on money to their beneficiaries, their kids, in a very safe manner that keeps it in a trust, and it keeps it just growing and growing and growing. But that's the thing that people don't necessarily understand, is it's not just for the ultra wealthy. When we sit down with someone, we're considering how much are you saving a month? How much are you, if you were going to put this money in a savings account or into a 401k, or how much would you be putting a month? And that's where we start. And the lowest amount that really makes this work is if you're saving about $300 a month, you can make this start maximizing for you. So that's the lowest probably threshold. You could even do it at $50 a month, but at that point it becomes difficult to really get it accelerating because it's such a little amount.
Right.
But 300 is like starting of the sweet spot, and then it can be anywhere from 300 all the way up to your billionaires.
Wow. Okay, that's very interesting. So, what are the typical process steps to kind of engage in that to start it? Is it, other than just kind of meeting up with you and talking about it? Is it something that people can kind of automate if they want to put like $300 a month into this?
Yeah, you can automate it. So that's one of the nice things we like about this, is because we call it forced savings, because it does come in the form of a bill.
Right.
And so you can make that an automated process
Right.
where it just gets pulled out of your account. And now because like I said, the money's liquid in there. Like, you have access to it. It's not like a 401k where if you pull it out, you're going to get penalized or taxed. Like, you have access to it. And so it's forced savings. But if you force savings at a bank, you're getting 0.5%. If you force savings here, you're getting 6%.
That's great. How come nobody, like, I'd never heard of it? Maybe because I wasn't like interested or actively looking into this, but not sure if anybody, like, I don't know anybody who knows about this. So
so like I said, my journey, like, I read a book called Killing Sacred Cows by Garrett Gunderson, and he sort of talked about this strategy in there, but then I read another book that he wrote called What Would the Rockefellers Do? And like, it just blew my mind. Same question, like, what in the world is going on? Like,
right, how come I don't know about this?
Right. And like, went back to my teacher, as being a teacher, I was like, why on earth are teachers being told to put their money in the stock market with that volatility? Because when I have those negative years as a teacher with the amount of money I'm able to contribute, it really destroys what it's going to finally be.
Right.
But if I was contributing the same amount of money into this, like, I would beat it by hundreds of thousands of dollars, which is a huge deal in retirement.
Right.
And I was like, what the heck?
Right.
Like, and so I was like, I've got to do something. Like, it like motivated me to become here.
Right. So. when 2000, and this is, I should probably laughing about this, but when 2008 happened and a lot of 401ks just became 401s.
Right.
You know, because people lost so much money that it was just, you know, people have like this heartburn after that. So like a decade following that, people were like very cautious, I guess, right? And now we have this, again, corona pandemic right now, which is again creating irrational behaviors in the market, because initially when it dropped down, people were like, just, you know, they lost a lot of money, and maybe some of them exited, and then it just kept on going up. And even though all these bad news are coming out, the stock market continues to go up, and people are now maybe just fueling the fear of missing out, right? They want to be like, hey, I need to put money back in, but they already lost because when it dropped down. So it sounds like this vehicle, what you talked about is you know, less volatile at the least.
Right.
It's an easy point of entrance, low level of entrance.
Zero volatility, like none. Like, if it's going to be volatile, it's going to drop to 4%, which isn't fabulous, but it's better than a negative year. And it's really nice. So I lost my thought there, but ask your question one more time.
Yeah, no, it's an easy, I guess, with even like $300 a month in terms of like starting this. It's an easy sort of like entry into this, right? You know, a lot of whether you want to do like mutual funds or some of those financial vehicles that are standard in a bank, you have to put in like 100,000 in order to reap some benefits.
Right.
And even that is not that much in terms of like the percentages. So with $300, if you can kind of start that, you know, process going, that's an easy in.
Right. It's an easy in, and it's not. A lot of people think, this is what I was going to say before, I apologize, but a lot of people think, oh, it's my whole life, I have to pay my entire life. But there's so many things and riders and things you can put on the policy to say, you get to a point you're like, I'm just going to throw out a number, I have $500,000 in this account, I'm going to stop paying. Like, I'm just going to let it sit there. Right. So you stop paying premiums. The death benefit is what it is, but you still get the 5 to 6% growth. So even though you stop contributing, now you don't have to pay a premium anymore. Now you want that money to go somewhere else in your life, or you want to start a new policy, or you get to do whatever you want. But once you get to a point, you can stop. So it's very flexible too. Like, you're not locked in, which is very nice for some people.
Very interesting, very interesting. So it's sort of like the best of both worlds in a way. You get the liquidity of investment. You get better percentages than any kind of savings that we have right now. Safer than mutual funds, and lower sort of like level of entry in terms of investment. You don't have to put in like $100,000 in order to start. It's very interesting. What else in terms of financial planning and financial advice? So that would be like A. What's B that you would recommend in terms of for businesses to give them a leg up, so to speak, on running a business or helping a business grow?
Right. I think let's go back to the taxes. So I'll just give three big tax things that we see most business owners really just don't miss out on. So number one is using what's called the Augusta Rule. The reason it's called the Augusta Rule is because there is a senator or a congressman in Augusta, Georgia, which is where the Masters is. He wanted to rent his house out tax-free during the period of the Masters, so he didn't have to pay taxes on the income he made because he was renting out his own personal property. And so it got put on the tax code as the Augusta Rule. Now it's 14 days a year you can rent your house tax-free. But business owners can take advantage of this by leasing their private residence to their business and host a business event there. So you're going to do trainings, you're going to do maybe a marketing event, you're going to do something business related, and you're renting it out for the cost that it would cost to rent out the same square footage of a hotel or another event space.
So essentially you're renting from yourself.
Renting from yourself, right. So your business pays yourself, which is you, to rent the space, and you can do it up to 14 days a year. And we see about a $5,000 to $6,000 tax break from that a year.
Wow, excellent.
So that's one, is take advantage of the Augusta Rule. Number two is paying your kids. So if you have kids, now you can't pay an infant to be your janitor because the IRS understands that infant
that'd be perfect.
Yeah.
They make huge mess.
So it has to be reasonable. Like you have to pay them a job that is actually that they can handle and is real. But you can pay your kids to do things for your business, whether it's shredding paper, to be the janitor, to maybe they're the social media person or they're the model. You're paying them to do something, but you can pay them up to $12,000 a year tax-free.
Okay, wait. But isn't there like minimum age that you can hire someone?
No, well, yes, but so that's why you have to do you can't be hiring them to do like dangerous things. It has to be reasonable. That's why, like for example, a lot of people that I know that use this strategy will hire their 6-year-olds to be the paper shredder, and so they'll pay them not $12,000. Like you can't justify $12,000 off that, but they'll pay them throughout the year, maybe a couple $100 to $1,000 that you were going to spend on them anyway because you are their parent and you buy them food, you buy them clothes, you pay for their sports stuff, but now you're paying them, and then they pay for those things. And so that saves you, like you can do that $12,000 per child. So if you have a lot of kids.
How did I not know about this? That's amazing. Okay, so that's two.
Yeah. So
is there anything special that you need to set up in order to actually do this claim on your, is it by claiming, this is on your business taxes, right? That they're an employee. Okay.
And so you're paying them as an employee, but you can, because the first $12,000 that you pay them is tax-free, so you don't have to pay FICA, you're not having to pay all those other taxes that go with paying a normal employee $12,000.
Right. Okay.
So that's number two. I like that one because it teaches your kids a little bit of financial responsibility, because now you don't pay for everything. You pay them to do it, and then they can choose how to use their money. Like if they waste it, then they're out of money. So I like that one.
Can they roll in? What's the minimum age, I guess, to put in the first vehicle that we were talking about with the life insurance?
They can. Yes.
So literally, you could hire your kid and have him, earn that money, and then put that in the first vehicle that we were talking about.
Yes. And so you can maximize their dollars there, and they can still use it, because remember how it's liquid, so it's still available to them. But while they're waiting to choose to make their purchase, they can have it growing.
Right. Okay. So that's two.
And then three is something called, this doesn't apply to every business, but it's the biggest bang for the buck that we can help businesses with. It's the Research Development Tax Incentive. We found 95% of qualifying businesses don't use it. And so this is businesses that are trying to invent or trying to create a new product, a new process, a new system. It doesn't have to be, don't get caught up in product or test tubes, like a new system. And we find on average it's a $10,000 to $30,000 a year miss out by businesses that don't claim it. And so if you're in a science field, like just for example, if you can't think of what a science field is, like if you're a dentist or a doctor or a chiropractor, because those are in sciences, and those people are trying to find custom solutions for their clients, so they're always creating and tweaking, like I'm going to try this or I'm going to try that. And so that applies to the credit. And so all the money that they're doing to solve that problem, which is every patient, a percentage of it goes to this credit. And so it's a huge list of industries. Like like I said, dentists and doctors, but it could be textiles, it could be manufacturing, it can be architectures, contractors, it can be breweries. We've had so many different businesses qualify for this. And
how do you find out if the specific type of business that you're in could qualify into this?
Right, and so that's why I love to just say this. We can find out for free. Like, you don't have to pay us anything. Like, we'll look, we do a quick application, it takes like 15 minutes. We look at your tax returns, we look at the application, and our CPAs go through it, and they'll decide, hey, this person meets the criteria. We come back to you in about a week, we say, you qualified, and this is how much you qualify. That entire process of us finding out was completely free to you. If it came back and we found out, sorry, we didn't find anything, you don't qualify, all it was that 15 minutes. But if you did qualify, like, it's going to be substantial. Like, you're going to get some businesses get hundreds of thousands, but you're going to get 5 figures back.
Right.
Most businesses, which is the difference. Maybe you wanted to go on vacation and you didn't have the money, or you want to expand. So
expand your business.
Right. Yeah. There's
build that back into it. So let's just recap. What are the three again?
So Augusta rule: pay your kids, research and development, or R&D tax credit / incentive.
Wow. Okay. Well, thank you for that. I did not consider those as even possibilities. That's amazing. What are the things starting a fledgling business can do to kind of bootstrap itself and give its typically first couple of years, the businesses as they grow and try to establish themselves have a tough time doing that. And if they survive, let's say that 2-3 year cutoff where most businesses or a lot of businesses fail, then they kind of, I guess, built up enough momentum to continue with the business. What else can they do to kind of during that time help themselves to succeed?
I think for me, it's don't give up. Like, you're gonna have negative days and you're gonna have things go wrong, and like I think you just got to be
a mindset,
right? Just a mindset of, I'm going to make this work. I'm going to let like those things roll off of me. I'm not going to just like push them aside. I'm going to learn from the mistake. Like, why did this happen? How can I solve the problem? But it's a mindset, because if you just think that you're causing the problem, it might not have nothing to do. It might just be you're just doing one thing wrong.
Right.
And if you just beat yourself up about it and you're like, well, I give up, and all it took was one tweak. Like, if you have to have that mindset of, I'm going to be successful. I'm going to make this work. I'm going to have a team around me that's going to help me with my taxes, that's going to help take all that off of me so that I can just focus on my business.
Your business. That's such a great advice. What we're doing over here, building out the podcasting platform, and quickly as a podcaster, you'll learn that you have, it's more than just like creating content and speaking with people. It's everything else, the ancillary stuff that you need to do, the social marketing, the marketing, all that stuff, and it quickly becomes overwhelming, and it quickly becomes something that it just takes away from what you were really originally passionate about, right? And so you need to sort of surround yourself with the right team of people, or use specific services that can take that burden off, so you can just focus on what you're good at and what you're focusing on, what you're passionate about. So that what you just said it really relates to me.
Right.
What is, in transitioning from what you did before and what you're doing right now, what are some of the biggest surprises that you had in terms of learning about the financial aspects? What were some of the things that you were like, oh wow, I never knew that, and now you're sharing this with other people?
I think number one, I know this is going to sound just a little bit harsh for some people, and I apologize up front, but like, you don't have to be smart to make money. Like, a lot of smart people aren't like, there's tons of smart teachers, and they don't take, like, there's so many teachers that could do so much and bring so much value to the world if they just tweaked and just put that knowledge to work, but they're too afraid, or they don't want to. And so that's number one, is you don't have to be smart to start a business. Like, if you have an idea and you're passionate about it and you want it, and you're going to keep digging through the trenches and keep pushing through your failures, then you're going to find success. I think that's number one. You don't have to worry about it, if I'm a genius at this, or I don't think I'm going to do that. Like, it doesn't matter how smart you are.
In fact, a lot of people that I talk to is the failures that people learn from, and so it's like fail quick, fail rapidly, and learn from that and move on. And that cycle, the faster you can do that, the faster you're going to progress.
Right.
In terms of taxes, though, because you kind of intrigued me with saying like, I wanted to dig into taxes, because that's something that you will probably almost never hear from regular Joe.
Right.
Like, oh my goodness, I want to study taxes. Some of the things that you mentioned something to me when we were talking before recording about taxes, that you can go back and kind of like review your taxes and get some of overpaying for those who are overpaying.
So let's say that you're hearing this now and you're like, hey, I think I applied for, I think the research development tax and credit applies to me, and I think it's applied for a while. We can look at your taxes, and we're not just going to help you for the future. Like, it'll help you in the future, definitely. Like, you're going to save on your taxes. You're not going to have to pay all those taxes. But you can actually go back and amend taxes up to 3 years, and you can get back all the mistakes that you made if it was legitimately like there.
Right. If you didn't take advantage of.
Right. If you didn't take advantage of something and it was in the tax code and you legitimately had it, you can go back and amend your taxes. It's not that big of a process. A lot of people think, oh, it's going to spark an audit and it's going to make me they're going to really dive in and make me have to pay back all this other stuff that had nothing to do with it. But that's not how it works. When you amend a tax return, yes, it goes to a real person. Like, when you typically submit taxes, it's just most of it's all automated. And like, the automated system will say, I think you should look at this one, or I think you should look at that one. Then a real person will look at it. Yeah. But when you amend it, it actually goes to a real person. So it's going to an IRS agent, and they're looking at it. And if they give you the money, like if they say that what your CPA prepared on the amended side, and they agree with it, they're not looking at anything else. They're looking only at what the CPA gave them, as like, did this apply to research development? Did this apply to Augusta rule? Did they pay their kids here? If it applies and the CPA or the IRS agent agrees with it, and they send you the money, not only did you get money that was probably lost forever, so you get thousands of dollars back that can now be in your business or in your life, right? But they've already audited it. Like, they've already looked at it. They're not going to call an audit on something they just gave you,
right?
Because they've already spent 2 months, or because it takes a little time for them to amend. It's a good chunk of period. So, how
often does that happen in terms of like businesses not taking advantage of something, overpaying in taxes?
So we find it's most. We find it's the majority of small businesses.
Small businesses.
We find the majority of small businesses are going to pay per $100,000 of income that they make. They're going to overpay $10,000 to $11,000.
Wow. So that's potentially something that could be recovered up to 3 years going back.
Correct.
That's amazing.
Especially if you qualify for the research development tax incentive, because there's some industries, like dentistry is a big one. That's just who we seem to help most. They seem to miss this the most. But like, we got back in a 3-year period of time, we got back to dentists $74,000. Like, $74,000 is months worth of work for them. And they just got it back just by amending their tax returns.
Right, that's amazing. That's another thing that I've never heard about. I mean, I knew that if you think you screwed up your taxes and underpaid the government, you should go and fix your filings. But working the other way around, that if you think that you overpaid and going back and getting that actually refunded to you, that's something that I have not heard.
Yeah, and business owners. If your CPA isn't helping you do this, find someone that...
you need a new CPA.
Right, you get a new CPA, because if they haven't helped you go back, and if they aren't pushing you further to really lower your tax liability in the future, then you need to find someone that does. Like, don't let fear of an audit govern if you're doing things legitimately, there's no reason to fear.
Right.
Like, just trust that you're doing it. You're doing it already. You already want to be honest. You're an integrity-filled person. Like, there's nothing to worry about. Like, just try to keep as much of that money within your business as possible, because you work so hard to get there. Like, business owners work so hard to make their business what it is. Right. Like, don't give it away to the government.
It is. And I think there is this fear of IRS that's been kind of like so deeply ingrained in humanity's DNA right now, that everyone's just like, taxes are just it's almost like probably on par with like public speaking, where people are like just like, oh, I just don't want to do it, and when it's done, everybody just sighs this this sigh of relief that taxes are done. So they just want to kind of like, let me just pay but they don't look at it especially small businesses. Like, large businesses, they have specialized teams, accounting that will tease out every single dollar, right?
Right. Like, why does Amazon pay zero in taxes? Because they're not doing anything illegal. All they're doing is taking advantage of every tax code available to them.
So that's a good thing to kind of bring in as a perspective. Yeah, think about these big companies that are kind of like really taking advantage of everything that's there to be taken advantage legally and in a normal course of doing business.
Yeah, and that's 100. Like that is like if you fear, like politically, there's some people that might not agree with this, like trying to lower your tax liability. But I think it's best for people. That I think it's best for businesses to have that money. I think they're going to use it. They're going to create a better country for us than the government does with it.
Well, yeah, because that money is going to stay with the business, right? So now business can reinvest that into its own operations, and then if that's a leg up that's going to help them to succeed, then we're going to get all the benefits from that, right? Because they're going to hire more people. They're going to develop maybe a new product.
Right.
Now they have all that additional liquidity, all that additional resources in order to grow the business and continue on.
Right. You're 100% correct. Like that's why I fell in love with this. It kind of felt with the teachers, the retirement account thing with me, like that clicked it for me that it wasn't going to work. But now that I own my own business and now that it's me, like I completely understand. Like I'm going to do better. I'm going to have more. I'm going to feel more comfortable. I'm going to be more productive, more abundant in this world. I'm not greedy. I'm going to spend it to make the world a better place.
Right.
Like I'm going to share it. I'm going to give it, but it's going to maximize me and it's going to maximize my family, which is much better.
It is the ecology of things, right? Like you see it as a system of systems. You see that what you put out over there comes back, and what you collect, you spend out there, and it just feeds this whole economy of businesses, especially small businesses. So it feels right. It feels the right thing to do in order to maximize what you're doing, and instead of maybe putting it back into the government where it may or may not be spent as wisely as a small business. Because let's be honest, small businesses have to be really frugal, right? They really have to, every dollar and dime matters, versus on a grand scale, like it may be lost in the effectiveness of deployment of those. How expensive is all of this? How expensive is it to kind of engage in? Because probably some of the things that people are maybe not as keen on, when getting with financial advisors is like, well, they're going to take 10, 20, 50%, whatever it is. How expensive is it to employ some of those strategies that we talked about today?
Right. So when it comes to, like I said, with the research development, that one's free. If you want like a tax review, we call it a 360 tax review. It costs about $400 to $450, but the nice thing, again, this is what we like about this, is if we don't find anything, let's say maybe you have, and you're like, I think I've been doing a lot of these things, but I'm not sure I've maximized my tax liability, but I just like to check.
Right.
It costs $400, but then if we don't find anything, we just give you your money back. So we only keep that $400 if we don't find anything. When it comes to that money maximization with the life insurance, like that's all on how much you want to put in. Like how much do you want to put in will determine how much it costs per month, or maybe you only want to do yearly or quarterly. Like there's so many different flexibility depending on people's situation. Like majority of people do every month, but again, we set that up like how much money are you saving? Like this is not extra money. This is money that's just being saved versus put in a bank account. It's now put here.
Right. All right. Well, let's plug in your business and where can people find more about you and your business and engage over here? How are you doing things right now in the COVID era? Because people may be shying away from like meeting in person. What's happening with that? Right.
So everything is via the phone or on Zoom. We do everything that way. If someone really wanted to meet us, I guess we could meet for lunch. It wouldn't be that big of a deal. But we do things nationwide, so it's not just in Utah. So even previously, it was almost all phone or Zoom. Mm-hmm. But if people want to get a hold of me, like we can do free, like we love to do free consultations. Like just have a conversation to see if it works for you.
Right.
And so go to biglifefinancial.com/financial strategy. And you'll put in your name, your phone number, your email, and we'll get in contact with you. We'll set a time to meet. The nice thing about it, when you do that, you're going to get a free book. I mentioned the book earlier, What Would the Rockefellers Do? So you'll get that book, and you can get a free if we have an R&D tax incentive ebook, and that will be free as well. So if you're not sure about it, if you don't want to meet with us, you can at least get those two free things, and you can just tell us, I just wanted the books and I wanted the information versus the consultation.
Justin, thank you for being over here. I really appreciate it. When we originally connected, we were like, well, talking about finances and taxes is going to be like, people would be like, but I think it was very valuable, what you shared over here. I really appreciate the different angles and perspectives, and I've learned quite a lot of like how to maximize, a lot of things that we can, how do we park our money and things that I've never heard of. So I'm gonna be probably implementing some of that myself. And thank you for making it fun to talk to you and learn about these things. And maybe we'll talk again more after COVID and see if there's any new developments in the financial after this whole financial mess. So if you enjoyed this podcast and learned something new from this, please share your feedback. Send us comments and share this with others. We're going to be extracting some clips out of this on topic specific items that we talked about on this podcast. So make sure you check that out. If the long version is too long for you, we also have always a shorter clip versions. So check it out on YouTube. We are at youtube.com/apodcast, and you can also check us out on apodcast.com, where you can find all our social media links. So if you like what we did over here, you'd like to hear more about this, please let us know. And until next time, I'm Adrian Sinclair, and this is A Podcast with Interesting People.
Thanks for listening to A Podcast with Interesting People. Please subscribe and leave a review or comment.
And support us by sharing our episodes on social media. We really appreciate it. And for more information, visit us at apodcast.com. Thanks.